Alphabet, ticker symbol GOOGL, which is the Class A share, hit an all-time high of $191 on July 10th. Since then, the stock is down 13%, and at the time of this recording, it is trading around $166. In spite of losing 13%, the stock is still up 18+% year to date. If you had just bought S&P 500 at the start of the year, you would be up around 17.89%. Whereas with Google, you are up 18.64%. So there is a slightly better performance by Google. In spite of the most recent turmoil around the antitrust issues, is Google still a buy, or do we see that Google stock declining further in the coming months? That is the question we are going to answer in today's video. If you enjoyed today's video, make sure to give us a like, and without further ado, let's dive in. Around the first week of August 2024, we got this bombshell of a report that one of the court judges considered Google as a monopoly. In this news article, Judge Amit P. Mehta of US District Court for the District of Columbia said that a 277-page ruling that Google has abused a monopoly over the search business. When this news came out, the stock quickly tumbled down a couple percentage points, and we had a lot of discussion around the internet whether Google is a good buy or not, and what is going to be the future for Google and its related companies. So before we jump into our analysis whether Google is a good business to buy today or not, let's take a look at how smart money is looking at Google.
For more on whether a Google breakup could actually happen and what it could mean for the stock, let's bring in Deepwater Assets, Gene Munster. Gene, so what do you think? If there were an announcement tomorrow that Google will be broken up, what would the shares do?
I think I'm leaning with Steve on this. I think it's up probably 5% plus. I think ultimately this could unlock 20% of value. Put the probability at low, call it 15% that this ultimately some variation of this happens. But to answer your question is that I think the sum of the parts do unlock value here. This exercise is a well-traveled road, as you mentioned. And typically we, with a company like this, I think that it's important to recognize that when things do get broken up, there's going to be a lot of agreements that will be quickly put in place that would be probably infuriate regulators. But ultimately, I think the substance of how Google functions would remain relatively unchanged. But again, I think that this would unlock value.
So you heard what Gene Munster said, that even if Google breaks out, there is more value to be added to the stock itself. Now, of course, we have fears of recession coming in as well. However, in all these cases, that does not take away from the fact that Google is a very, very solid company, and there's a lot more value to be added to Google, especially in the AI boom. If you started to buy Google for the first time at the start of this year, you would still be up 18.67% year to date. That does not mean that the Google stock price will continue to go up. We will touch that upon in our technical analysis, but what we are trying to get at is Google is part of the Mag 7. AI is a dominant force, and Google plays a very big role in AI. Whether you're looking at large language model, search engine activation, softwares, moving into the cloud with AI capabilities, or even looking at autonomous driving with its business with Waymo. Even with the antitrust issues, the short interest is 1.12%. In the July, Google was one of the least shorted companies in the market. With Google, Class C shares were shorted around 0.33%, and Google GOOGL, the Class A shares were shorted 0.53%. This particular summary from Simple Investing, very, very interestingly, they pointed out AI will be a key long-term growth driver for Google, which I guess we all know, and the company is integrating generative AI into most parts of its business. This is a very, very important aspect, and their current top 100 customers who use Google Cloud are using the generative AI solution. So as more and more customers adopt the generative AI, which I believe is in a very early innings, so in the next 2 to 4 years, we will see a boom in the software space of the AI aspect. Right now, it's all about NVIDIA, Broadcom, AMD, and other chip companies or infrastructure companies. But the second phase will be on the software side. This is where Google's software will start to excel along with many other companies. Moving on to the financial aspect, this company on a quarterly basis brings close to about $80 billion. In 2023 September, they were $76 billion, and in the last 3 quarters, they have brought over $80 billion. $86 billion in December 2023, $80 billion in 2024 March, $84 billion in 2024 June, averaging around the $20-21 billion in operating expenses. They are keeping their R&D also pretty much in check. And their net income is around the $20 to $23 billion every single quarter. Moving on to the balance sheet, currently they hold about $161 billion in total current assets, and on the long term they have over $414 billion. On the current liabilities, they are about $77 billion, and on a long term they are about $114 billion. Have a lot more assets whether you're looking at current or long term versus the liability. So that also gives a lot of credibility to this Mag 7 company. It's a very solid balance sheet from a company standpoint. Now, generally, Google is a very beloved company of Wall Street, and that's the reason Google has a buy rate. There is 35 strong buys, 14 buys, and 11 holds with 0 sell. Currently, the Wall Street's average price target of Google is about $204. So from the current price target, you're looking at about a 23% upside. Whenever you're looking at these price targets, keep in mind that the price targets are generally higher versus what the stock is currently performing, and you can see this clearly in this trend line here. On a 5-year data, this is the Google price target, which is the orange line, and then you have the Google actual price, which is the blue line. And you can see price targets are always way higher, and the stock price generally is lower than what the target is. So whenever you see the price targets, keep in mind these are general guidelines on how the market expects the stock to perform. Looking at the put to call ratio for Google, their put to call volume ratio is 0.46 and their put to call open interest is 0.91. This is very bullish for Google itself. This is the weekly chart for Google, and you can see we have been on an uptrend all the way going back to May of last year. We continue to make higher highs until we hit this big all-time high of 190-175 in middle of July. Since then, we have had very strong selling pressure and a lot of profit taking, I would say. And the news of antitrust did not help. And currently, we're trying to find this support level right here. If we switch to the daily chart, we see a lot more data points here. And currently, the stock is trading below its 50-day moving average. It is sitting right very close to their 20-day moving average and also above its 200-day moving average. The stock is trying to find its place. Is it going to barcode at these levels, or is it going to have an uptrend? And a lot really depends on the overall market. We heard from Jerome Powell that we will be getting an interest rate cut, most likely in September. Whether it's 25 basis points or whether it's 50 basis points, that is going to be revealed in September. From the time of this recording, Nvidia's earnings will be coming out after 24 hours. So we may see some major bump based on the performance on the AI aspect. We may even see Google stock breaking this trend line and actually heading up. So there are a couple scenarios that could play out. When they reported their last earnings in April, the stock was trading around the 155. We had this gap up going all the way to 174, and then we saw a massive run up all the way to 191. Since then, this gap got filled around the first week of August when we heard that antitrust news. Prior to that earnings, we had this another gap up going all the way from 140 to around 147. So this is still a gap that has not been filled. Now with this trend downwards, here are a couple things that could happen. Based on the current price, this gap fill will require the stock to go down another 13+% for it to fill. So in our first scenario is the stock continues to stay in this downtrend, making lower highs, and eventually fills out this gap somewhere around September, October timeframe. The other scenario could be that we have a massive bull run where they break through the trend line, stays above this, and starts to make higher highs. These are the two scenarios that could eventually play out. Now, if you have been following the channel, you know that on this channel we talk about gap fills a lot. On a technical chart, gap fills are very important. In this scenario, for me to personally add Google to my portfolio, I'll be looking very closely to this trend line and see if it continues to make lower highs and starts to come around this gap region. And at that point, I will be adding a lot more into my Google from a long-term standpoint. If you are an account that has Google stock, let's say you bought the Google stock during the highs over here in 176 to 191 level, then in that case, what you could do is you could nibble away on few Google stocks to kind of dollar cost average and lower your cost basis. The second scenario is that you have Google stocks but at a much lower cost basis. So at this point in time, you may want to keep a track on this trend line and see if it continues to make lower highs. And if that's the case, then I would definitely wait to see this gap fill. And this is where exactly I will be personally adding into Google account as well. And in case if it breaks through the trend line and starts to make a higher highs, then in that case, I will wait and not deploy the cash at this point in time. The way generally I would execute these strategies is by selling cash secured puts. One of the ways you can sell selling cash secured put is going out maybe November and looking at about 140 or 145. We will get around $2.07, which will reduce your cost basis to $143. The delta around there is 15, so you could play that. For a cash secured put, you will need to put, for one contract, you will need to put about 14,500, but your cost basis would be 143 if it were supposed to go down below 145. What it does is that if you open this cash secured put today, you are basically hedging yourself from a 13% downside, and then the premium helps you with additional $2 on your price point. So those are a couple ways you can play Google. From my perspective, Google is a long-term buy and hold for me, and I always look for opportunities like this where I can add to my position. So let me know in the comments, what do you think about Google? Do you think we will have a breakout from here, or do we still see Google heading downwards? And what is your price point to buy more Google stock if you are going to be a Google investor? If you enjoyed today's video, make sure you give us a like, click on subscribe, and ring the bell notification. I will see you next time, investor family, but don't forget to invest for tomorrow.